Buddy Brian here. It is Wednesday, the 17th of May, and markets got smashed here today. So we've been up for a while. We've had a great trend, and now we've broken an important support level. So when that support level is broken, you have to take it seriously. 238 was our level. I had pointed out in the chat room a couple of volume-weighted average price levels early on. The one from last month seemed to want to hold in that area, but of course it did not hold there. So we were also looking at the VWAP from here and from this peak, which kind of came together right at about 236.55. The point was not to set that as a place to buy, but as a place to watch more closely for evidence of support. And we had no such evidence today, as the market was stuck below the volume-weighted average price and closed at the lows for the session. So all day long, we were below a volume-weighted average price, which was declining, and we closed below the low of the day. So we are guilty till proven innocent from a daily perspective, meaning you don't look to purchase during that event. Instead, you listen to the message of the market. And now we're below a declining 5-day moving average and below an important level of intermediate term support. We're going to look at this market as most likely going to be quite volatile here over the coming week or two, perhaps even a little bit longer. If we back it up to a daily time frame with no studies other than just some volume-weighted average price levels, we can look at the year-to-date volume-weighted average price, which kind of looms large in my mind. I think that before this selling is done, it seems as though it has enough panic to it that we could get down as far as that year-to-date volume-weighted average price. Below that, of course, we would have the VWAP from the election, but I think that's too far to look forward to. The question that people always ask is, was that the end of it? Well, let's back it up here on this daily time frame as well. We still have an advancing 50-day moving average. Now, we do have what could be a double top. We don't have evidence of a double top until we break below here. People will say it's a double top, but it's not actually confirmed until it breaks below the midpoint. A lot of times a double top will do just that. It'll have a failed move higher. So from this failed move higher, we're seeing a faster move lower, and it needs to be taken seriously. If you look at what we did with our stocks today, it was really quite remarkable. We got stopped out of an SGMS, overall profitable. We got stopped out of GLW with a loss of 16 pennies per share, and that stock continued to get smashed after we got stopped out of it. KMI, we're short in here. We took a third off, and we had our stop at the precisely perfect level to be able to continue to hold. When we got stopped out of for a dollar loss on 2/3 of the position, but because we took $1.38 on a third of the position, we still got out of this with just a loss of 21 cents per share. I mean, that's really remarkable risk management, and I hope you guys appreciate the what we're doing here, and that we're having such good results. We got stopped out of MGM with a nice profit as well. After getting involved in that one last Friday, I believe it was, we got stopped out of that balance in here, and we kept our profit. Risk management is job number one. I say it all the time. Other people say it, but they don't mean it. What we do, the reason we take a third off, is so that we can absorb pressure during times like this, and we listen to the message of the market, and stops are our friend. They help us in this environment. So now we are in the luxurious position of having one open short position and 0 long positions from a swing trade perspective, and we can sit here and watch this market sell off as far as it wants. If you want to scalp and day trade, that's up to you. I'm not running a day trading service, and again, I don't think it's appropriate for most people to do, but certainly, keep in mind, do not be a buyer of stocks when they're below a declining volume weighted average price. That rule alone will save you a lot of money. I'm not looking to buy bargains. I'm looking to buy low risk, high probability stocks. That's the method I teach. That's what I'm going to show you guys over and over again. I don't say that it's the only thing that you should do in the market, but that's what I'm the expert in. If you want to look for reversals and that sort of thing, there are other people out there, I'm sure, who can help you with that. That's not my expertise. I stick to what I'm good at because I can help you on a day like today to avoid getting smashed and having an actual profitable day on a day like today, which most people did not have. Let's look at the NASDAQ. It got down to the volume weighted average price since the most recent low. Perhaps this is in an area of importance that maybe we'll be able to bounce from. We could also take a look at the volume weighted average, the Fibonacci from that level, and you see it's a 38.2% retracement of that most recent move. But there's no evidence of actual support here. We have, an increasing 50-day moving average. Great, that's wonderful, but it doesn't mean anything until the buyers show up. We look at potential levels of support. That's it. We are below a declining 5-day moving average. This market got smashed here today. It shows no sign of support in here. Perhaps it will bounce, and if you're a very aggressive trader, it might bounce all the way up to what will be the 2-day volume weighted average price tomorrow. That's quite possible. It's not what I would consider to be lucky, but it's possible. And if that's the style of trading that you're looking for, then again, that's something you should do, and I can help you with by giving you tips about staying away from it until it's at least above the 1-day volume weighted average price, which today's VWAP right here, and then tomorrow, let's say we gapped up there, and then we gapped up to that level and rallied a bit, and then we hold above tomorrow's VWAP. Then with a very small risk, maybe you look for a bounce trade, but with a 5-day moving average that is declining, we look at these markets now as intermediate term trend, guilty till proven innocent. They need to set up, they need to heal. There's nothing I'm looking for to tell me that. I'm waiting for the market to speak to me. I'm not waiting for, 50% retracement, 61.8. I'm not looking for a moving average or anything. I'm looking at, let's take it day by day and see how the market presents itself to us. And if we can find a low risk opportunity, we get involved and we manage risk. Business as usual. It doesn't change just because we have a down day. People will convince you that it matters because of this or that reason. The Russell 2000, disappointing action in here. We broke that support, and with it the potential for any break above this recent resistance. We closed exactly on that volume weighted average price since the election. I think that the more important level is probably this low, and what we might end up seeing is some kind of panic below there, and then a strong bounce back up. And then if the volume weighted average price since the election holds as resistance, then we're talking about a more serious event. But let's not get too far ahead of ourselves by making up scenarios, but instead let's listen to the message of the market and see what it tells us personally. SMH. We've seen this that day after day after day it has made 0 sense to sell the market short. We've had days like this before. We've had numerous ones. Now, is this the one that's going to be the end of this bull market in the semiconductors? I don't know. So far the odds are not good. We've got at least 3 other ones here recently that have failed. So odds are not in its favor. It's coming into a prior level of resistance that has the potential to become support. We can look at the daily time frame here with no studies and say, since the most recent movement higher, maybe we continue down towards this volume weighted average price near about 80 and a quarter. Certainly seems reasonable to me that it could come down to and maybe slightly through, bounce, and then start to look for a sell-off. But right now we'll be looking at the volume weighted average price from that low, and in all these markets we'll also be looking at the volume weighted average prices from the peaks as potential resistance levels as we go forward. Right now they're not relevant because they're too far away, but I'm just giving you a hint of how we're going to start to analyze this market each and every day as we continue our pursuit, as we do every day, for low risk, high probability swing trades. The biotechs also lost an important level in here today, and it just seems like the potential that was maybe starting to set up there is no longer valid. We spoke about what we were looking for, that this prior support had acted as resistance yesterday. We're wanting to see a pullback towards the 5-day moving average, flatten out, and then the chance to get long. So nothing lost in the analysis because we don't have a position as we're anticipating. We are back below the volume weighted average price from the peak, and it appears as though the biotechs are once again going to need a lot of time to heal before they are viable again.